Hello everyone, welcome back to another video. I'm Adam, and if you do enjoy this video and if you haven't subscribed already, please be sure to hit that subscribe button and like the video, and let's get right into it. So updates of the week are these two bullet points, and I'll explain them throughout the video, but I just thought I'd give you this first. So first off, the second wave of the pandemic may actually cause floating storage buildup and therefore a spot rate spike, which may actually increase stocks of tankers by a bit in the coming weeks. And as well, downward moves in the market in general also affected tanker stocks, and therefore it may actually be a good value play if this trend continues due to insanely low price to earnings ratios, right? And the downward move in the market is, if we look at the Dow, although it was down like 0.5% on Friday, it's been down over the week by more than I believe 7%. So if this trend continues, which I think it will, due to the uncertainty around elections and the pickup in cases, and major economies like Germany and France shutting down all across the world, this will also affect the states and tanker stocks. And if this trend continues, might be a good time to put more money into the market. Just my opinion. Okay, so let's get right into it. If we're looking at the spot rates on Friday, we can see actually that Suezmax rates have been up, as we can see on the 10-day trend. VLCC rates actually tended to go downward, so only 8,100 for the spot TCE earnings on Friday. But in general, good news for Suezmax. Of course, NAT owns 23 Suezmax vessels, and I have around $2,600 US in NAT, so that's why I'm mainly looking at Suezmax. And I think part of this upward move in Suezmax rates might just be due to random variation in the spot prices, or it might have something to do with the second wave causing an increase in floating storage due to less demand, which we'll go over a couple articles talking about that, right? Of course, NAT over the week we can see not looking too hot, down 6% over the month, down 17%, okay? Now trading at $2.91, so definitely penny stock territory with the market cap of $437 million, okay? And if we're looking at their PE ratio right now, 4.83, which is actually on the higher end, but still insanely low if we compare it to the overall S&P 500, which has, I think, about like a 30 to 25 or 30 PE ratio, right? So still pretty low. And they should come out with their quarterly results soon, and I'll of course be discussing that as soon as they come out. Okay, and Frontline, again, same sort of deal, except down pretty drastically, down 11% over the past week, and over the past month, down 16%. So again, pretty good value play considering that the P ratio is 2.25, and they're looking at a forward dividend of 36%, which is absolutely ridiculous, right? So these have been beaten down tremendously, especially since also the market is moving downwards. And I honestly want to put more money in, but I can't just because I already have a lot of my portfolio in NAT, so I just don't want to add to that position. But I would look at the lower PE ratio tankers if I had to put money in. So either Frontline or EURN, ticker EURN, with a P ratio of 2.57 as well, right? And I mean, this is a stock that, again, over the past 5 days, being down by 6%, over the past month, being down by 16%. So again, these stocks tend to move in line, right? If the tanker industry is doing well, NAT, Frontline, EURNAV, TK, they all tend to be doing well, right? So, yeah, that's I would just probably pick the best one. If you're looking to get into the market, pick the one with the lowest PE ratio, so maybe a Frontline or EURNAV. That's all I have to say about updates for the week for NAT, FRO, and EURN. However, when I looked at a couple of articles, I saw, this one guy, Charles Kennedy, he wrote an article saying weak oil demand set to keep crude tanker rates low. And I do believe that in the next at least half year, tanker rates may be low. However, I do think that because of the second wave, and if we're looking at the stats here, the new cases are pretty much at all-time highs in the US. If we look worldwide, similar deal, right? All-time highs for new cases. So major economies are shutting down in Europe and generally across the world. And so what does that mean for the tanker market? Well, this article is saying that actually companies are looking to store oil amid a second wave. And why is that? Because there's less demand, right? So another sign that the second wave is hitting fuel demand, oil trading firms are looking for new super tankers, which would be VLCC or Suezmax, to use them as floating storage for diesel, as demand is expected to suffer from the renewed lockdowns in major European economies, trade and shipping sources told Reuters. So again, this is exactly the same thing that happened that caused a huge spike in NAT, in FRO, and everything, is because they were earning money hand over fist. It was just like a printing machine going, right? They were just printing out cash just because of how much money they were making, because the spot rates went to insane highs, right? So concerns about fuel demand intensified this week after two of the largest economies in Europe, Germany and France, announced lockdowns, which the market was not expecting 2 or 3 weeks ago. Industry professionals and executives did not believe that countries would resort again to nationwide lockdowns. Yet France did, etc., etc. As the market braces for a faltering economic and oil demand recovery, oil traders are reportedly looking to take advantage of the currently low tanker rates and the contango structure of the market to store diesel now, with the intention of selling it at a later stage when demand and prices recover. Okay, so again, this is pretty big news, right? And I don't know if anyone has picked up on this yet, just because, of course, this is literally the same thing that happened, and it might take a couple of weeks to manifest itself. But my initial thought was, well, oil rigs have already shut down their wells and, you know, are keeping it at a pretty low rate of oil production, right? But this news here actually says that potentially there may be a spike in the spot rates for tankers as floating storage increases, right? So in order to take advantage of this situation, would be a good idea, and this is, again, is just my opinion, I'm not a financial advisor or anything, would be to actually buy beaten down stocks like Frontline and EURN, and ticker symbol for Frontline is actually FRO, and kind of hold them for the next coming month or two, see what happens with the spot rates, and generally the stock price does tend to correlate with the spot rates. So although there might be weak oil demand in, let's say, the next half year, there actually might be a short-term play developing here where you could actually buy the stock now, especially when the whole market is weak, and when the spot rates increase, generally the stock price tends to move with that, and then you could sell out in a month or two and make a quick buck. Okay, again, I really can't put more money into tanker stocks, so I'm actually not going to buy any Frontline or EURN, just because, again, I have a lot of NAT. But I do think that if you do want to play this out, at least in the short term, it might be a good idea to put in some money. And I mean, if NAT stock does rise to above $4 or $5, I'll sell. And of course, I'll let you know exactly when I'm selling. But yeah, that's pretty much all I have for the update for oil tankers this week. Again, if you did enjoy this video, please be sure to give it a like and subscribe. And yeah, let me know what you think about the whole pandemic second wave, making spot or hiking the spot rates up. All right, and yeah, I'll see you for the next video. Take care, guys.